Welcome to NASDAQ Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. As the financial sector evolves, blockchain technology is emerging as a transformative force, enabling secure, efficient, transparent financial operations. I'm your host, Jill Malandrino, and joining me for this special edition of Trade Talks is Congressman Zach Nunn, serving as the U.S. representative for Iowa's 3rd Congressional District, Marshall Hayner, CEO of Metallicus, and John Ainsworth, CEO of Bonafii. And we're here to discuss how blockchain is shaping the future of banking policy and services. We'll also highlight the onboarding of 80 credit unions into blockchain technology, discuss the implications for policy, and envision the next frontier for blockchain in the financial ecosystem. Additionally, we'll also cover Metallicus's acquisition of Bonifii and its implications for advancing identity and fraud solutions in the credit union sector. Gentlemen, it is great to have you with us. Welcome to Trade Talks. Congressman, let's kick it off with you. What is Congress's role in fostering innovation and creating supportive regulatory environment for blockchain adoption in the financial services space?
Yeah, well, Jill, first of all, very good to be with you. You got two great leaders here, Marshall and John, as well as Will, who are practitioners of this every day. And let us first say, I think Congress's first role should be listening to our private sector partners who have been in the field, who have been practitioners of this, so we can start to provide like a real strong safety rails on what an environment can look like. One that is not regulatory overburdensome, but one that provides clear lanes so that blockchain can be successful right here in the United States. Now, I serve on two committees. The first is financial services. That gives us everything, particularly where some of the leaders are here in advanced blockchain technology, also our digital currencies and assets, and overview of the SEC and Treasury, and their work to do it from the executive side. The second committee I serve on is the Ag Committee, where we've got this group called the CFTC, really looking at the commodities digital asset space. This is a place to think of where new technology and innovation can use blockchain, particularly when it comes to things like cryptocurrencies. And I'll say the third committee I'm working on is on this China Commission. I think one of the things we should all be looking at is where are our near-peer competitors. And when it comes to blockchain, this is an area where the United States is not operating solely. We have some real competition coming out of Beijing. And I want to make sure that this doesn't follow the same runway that we saw with telecommunications. Look, I served for 20 years as a counterintelligence officer in those three-letter agencies, and we saw what Huawei and ZTE did to try and get into telcos and that infrastructure early on. This is the next big battle between Beijing and DC. Who's going to have a best format for people to be able to jump onto blockchain technology? Because the true rare, or I'll say most lucrative entity in the coming days is going to be who owns the data and who's got access to that data in a way that it can not only be encrypted, but maintained and utilized. And I think blockchain gives us a great opportunity here in the United States to work with not only other allies around the area, but become a dominant force in this to maintain competitive advantage on who's got access, can manage this data, and will be able to be a dominant force for good in the digital space. So with that, I'm looking forward to the conversation, the questions, the role of Congress. We just kept the government open, so don't expect Congress to be on the front line of leading innovation here. But what we can do is we can listen to those innovators and try and codify a good space here so that the U.S. can be a successful lead in that. And with it, Jill, I'll hand it back to you for now.
Yeah, and Congressman, that's a great point that you bring up as it relates to data, because data really is the commodity of the 21st century. And that's why the regulatory framework is necessary, not only to give companies more foresight in terms of how to operate, but we also don't want to hinder innovation as well. And we're going to get into that in just a moment, talking about public-private partnerships for blockchain growth. Marshall, I want to get some background on Metallicus before we get into the PPP here. How is it positioning itself to secure and create efficient blockchain adoption?
Yeah, a little bit about Metallicus. We were formed in 2016 with the vision of bridging traditional financial services to blockchain. And when I got involved in crypto about 15 years ago, this wasn't really a popular topic. Flash forward to today, 2024. Just this past week, John Ainsworth and I and Bonafii have merged our companies, Metallicus. We're very excited about it. We met a while back as we were doing our business development, trying to bring in credit unions, banks, financial services into blockchain. One of the big problems that we saw was a lack of controls around anti-money laundering, digital identity, if cryptocurrency is becoming money, and I believe it already was, how can we regulate it as money, and how can the blockchain itself conform to traditional anti-money laundering laws, and also give us the tools to treat it like traditional money. So, for example, if you go to the ATM and you withdraw $20, that's a bearer bond essentially in your pocket. It is, you know, your ownership. And blockchain has a similar technology, but at the same time, there are serial numbers on that bill, right? And if I transfer money around the world, the banks that are involved in those transfers have to be compliant with the local laws and regs, and also it's their job to stop crime, to stop these problems. And so these are some of the problems that we saw with blockchain that were preventing institutions and banks from entering. If cryptocurrency is money, how can we treat it like money on the blockchain? And so really that was the vision of myself and my team in Metallicus. And with this merger together with John Ainsworth from Bonifii, we brought together really a comprehensive product suite and platform that allows you to take those traditional, what I call reg tech or regulation technology tools, and bring them on the chain. And I think that's why we've had so much success. Before the merger, I think we had about 16 or 17 credit unions and banks in our blockchain banking innovation program. And now I believe with this merger, it's over 80. So we're very excited. And, you know, there's been a lot of talk about how blockchain and banks are at odds. And I really don't see it that way. I see it as the evolution, sort of like the Blockbuster to Netflix evolution, if you will.
Yeah, I mean, at the end of the day, it is the infrastructure that is going to power the digital economy as it evolves. John, I want to learn more about Bonifii, the identity and fraud solutions through blockchain, because also at the end of the day, this intersects with cybersecurity as well when you think about identity and fraud. And it's well known that one of the first steps in terms of mitigating cyber threats starts at identity.
Sure. Well, thanks for having me. And just a little bit of background. We actually started, ironically, in 2016 as well as a research to action. And our actual legal name is CU, as in Credit Union Ledger. And so we really started off with research to find, is there a viable use case of blockchain that we could actually use for credit unions? And as you know, credit unions are member-owned, non-for-profit, cause for good. Inclusion is always a big effort of ours. So we went through a number of evaluations, and identity and fraud is actually where we landed. And we actually had the privilege of being involved with the European Coalition of Credit Unions, and specifically Estonia. And if you're familiar with Estonia, the entire country's on blockchain. And so we had a privilege of seeing, you know, what happens when you have a fully digital economy with open banking and some of the things that are finally coming to the States. And it was very clear to us, if you don't get identity right, everything else falls apart. So regardless of all the exotic use cases and things that are coming to market now, if you didn't have that building block right and you could securely identify both ends of the equation, then someone was going to be at a loss. And so that's really why we started identity and fraud. And clearly you've seen even most recently some of the things going on with Zelle in market. Yeah. And we know what happens when our customers and members lose financial access. And so that's really kind of where we started and kind of the plant, if you would.
Yeah, and Congressman, I want to go back to PPPs, public-private partnerships, for a moment here. And I would argue at this moment in time, whether you're thinking about critical physical infrastructure or digital infrastructure, the need for collaboration certainly is paramount, whether it's government agencies, financial institutions, blockchain providers like Metallicus and Bonafii. What's your perception and the future of what you think PPPs will look like and how they can enable these types of projects?
Yeah, Jill, it's critically essential. We learned a lot of these lessons in the cybersecurity space here, particularly with financial institutions like our credit unions, that there was already good practices being played out, tested, and evaluated, whether it's a foreign partner, like in this case, Estonia, and how it protected itself, or whether it's our financial sectors from New York to my home district here in Des Moines. Jill, I'll also highlight, I've only been in Congress 2 years, and in the first 2 weeks on the job, we had the collapse of, a certain crypto bank that had a lot of hardship. And as a result, it rippled throughout the economy. While federal regulators and federal elected officials, I remember being on a Zoom call with Chuck Schumer as he's figuring out how to use Zoom. We had everybody on to address how are we going to get after really complex problems. And some of the best navigators in the field here were the private sector who had worked with a very new and emerging technology to a lot of not just elected officials, but of the public sector side that had not dealt with it. What I'll also offer here is that it's also incumbent on the public sector to be able to hear what private partners are telling us and provide some real guidance on this. Because what we don't want to do is more Sam Bankman-Frieds who flee to the Bahamas and operate off the grid and make it more challenging for folks like, Marshall and John, who are doing things the right way and holding the same gold standard that a financial institution would do just so they can operate in the United States. I would offer even worse is that if there's no guidance coming from the public sector side, we're going to force innovation, whether it's in blockchain, digital currency, or other, to find harbors that operate. And that means offshore from the US, out of countries in places like London or Singapore that can become the new blockchain hubs, or really go to the extreme and have places like Russia, Iran, China, and certainly North Korea who are trying to onboard some of this technology in their own, and they're sparking it off faster than we can defend against it. So the partnership is not only essential, there's a lot that we can learn from the private side, and I would ask the private side help guide the government side here on where we can have equilibrium so that everybody can innovate in this space, because candidly, we're much better when we're all working together to try and tackle these really dynamic, innovative, and fast-moving challenges.
Yeah, I would argue that I agree with you as well. I mean, particularly regulation by enforcement doesn't necessarily help the situation. Right. So being more proactive, putting those guardrails in place, because to your point, it is a matter of national security at the end of the day. Again, when you're thinking about critical infrastructure and our financial system and continuing to lead as a global capital markets epicenter, right?
You got it, John.
Yeah. Marshall, let's talk about some of the key challenges when you went through the integration with Bonifii and bringing on those 80 credit unions. What are some of the more tangible challenges you can tell us about?
Yeah, so I would say, blockchain and banking have kind of been in two different camps for a while, where you have your MetalPay or you have your Coinbase or your Kraken, and you move your funds to that intermediary, and then you can go to the blockchain. We haven't really until what Metallicus and Bonifii are working on together have seen the ability for credit unions or banks to have this direct integration to the blockchain. And in order to get there, we need to have guardrails. We need to have better systems in place. And something that's not really talked about very often is I guess what blockchain can solve. People say, it's going to make banking better. Well, how is it going to make banking better? It's going to make faster transfers. We're going to eliminate counterfeit currency, which is something that's really hasn't been talked about a lot, but I think is incredibly valuable for our national security. The blockchain of yesteryears of 5 years ago, 10 years ago, is not really fit for the blockchain of 2025. The blockchain of 2025 is going to be private permission ledgers that can talk to the public ledger, but have controls, have safeguards in place. So for example, if you lose your private keys, can you get back into your wallet? Right? We've heard that story where somebody's lost their Bitcoin, famous show Silicon Valley, where the guy's sorting through the dump trying to find his Bitcoin. It's funny until it happens to you, but if you lost your password to your bank, the bank could get you back in, right? And so some of these technologies are, the challenging technologies that we're building. If you had an issue, for example, you had an issue with Zelle where your account got hacked, guess what? The bank tells you, good luck. Well, Congress is looking into that, and I think other fintech players are looking into solutions for that. We looked into a solution for that, and the ability to track and trace real time with the ability to claw back and pull back funds or mark them fraudulent, where all parties can know simultaneously. That really was what Zelle or early warning systems was supposed to do, but I believe the blockchain fulfills that promise. And some of those technologies are the things that we're working on to make the banking experience better, to make the experience better for the credit unions, and also to bring the younger generation into the world of credit unions, because I think that there's an incredible atmosphere of community support. And I think that that's something that really aligns with the blockchain ethos, right? Of empowering your local community, being closer to your local businesses. And that's something that over the next 4 years, I'm very excited about, seeing in America as kind of a resurgence of, focusing on America, and also how do we make these systems better? How do we bring a lot more faith back into the banking system, and also with cryptocurrency. Congressman mentioned Sam Bankman-Fried. He was a guy who kind of showed up that not many people like myself that have been here for a long time knew. He talked the talk, but at the end of the day, he didn't really do these things. And he took the business offshore. At Metallicus, we want to keep it onshore. We believe that building blockchain should happen in America. Silicon Valley is the home of software development, really globally. And all of the most interesting blockchain and cryptocurrency developments are happening here. So we believe there's a way you can play within the rules. You can build a better system than what we've had before. And we can ultimately create a better experience for consumers and merchants and businesses.
Yeah, I mean, at the end of the day, it just democratizes access to financial services. And we're not only seeing that in the US, but of course, globally as well. We tend to think, I would say, very US or Western centric in terms of how can I trade this? What's its value? How can I hedge with it? But the fact of the matter is there's a couple billion people who are leveraging this type of infrastructure to create local micro economies or get alternative forms of capital or access to cross-border payments. So it's really the infrastructure that I think is exciting because there's a lot of democratization of access to banking that we can do here in the US as well. And I think that's important that you pointed that out. John, what advancements in blockchain-based identity solutions do you foresee, and how will this impact the broader financial services industry?
So great question. I think probably most immediate in the States on my mind is actually 1033 from the CFPB. I mean, that looks to be kind of open banking. My background was Visa, MasterCard for a long time. And so we kind of saw, you'd have these emerging technologies and they would finally come into the States. And if you think about that economy where I'm going to give permission as a consumer for my data to go from one authority to basically facilitate some other transaction, opening a new account or whatever, that digital identity becomes even more important because you better make sure whoever I gave permission to is actually who they say they are. We better make sure that there's no, I'll say intrusion, if you would, to actually get to the intended destination. So for me, for that economy where everything's open, we have open API, we have open banking, that digital identity actually becomes very important. I think the other thing is if you look at our universe for cooperatives, we have a term called shared branching. And for credit unions, it's basically a way to compete with some of the larger institutions where if I went to a credit union in California, but I actually lived in Florida, I can make deposits or withdrawals because that's the convenience, right? I need to actually go into a physical location. Well, you can imagine the challenge with that of I show up to a branch in California and they're like, well, who's John and how do we authenticate John and how do we know John is John? That's the one side. And then if we're actually sending money, well, how do I find the most efficient, safe way to actually get that money transferred? And so that's kind of a real world use case where we're looking at kind of how do these kind of all come together. That's why we're so excited about coming in Metallicus because they have all the building blocks where we can facilitate that. But identity, again, and fraud is a great example. And I applied, you mentioned the gold standard, and that's really what we strive to is how can you have that assurance that, for KYC and KYB, that we can absolutely verify that we've done the homework, but we've also protected that so I don't just put all my data out there that it's going to be misused. And we all have breach fatigue. We read it every day,
Mm-hmm. Congressman, let's wrap up the conversation with you. How does blockchain fit into the broader vision for modernizing financial policy and ensuring that American leadership is present in emerging technologies? One thing I'll say about this administration, if 1.0 serves as a guide, it's really benched on performance of the economy, the markets, and maintaining and fostering America in terms of leadership in the global capital markets. Is there broader support for advancing financial services policy and leveraging these emerging technologies? How do you triage what needs to be managed in terms of policy?
Well, I think first and foremost, if anybody wants to dive into a new technology, this administration, this Congress, both the House and the Senate, have really prioritized what we can do in cryptocurrency. You're seeing it already in the subcommittees that are being established. French Hill, the chair of financial services, is making digital assets a huge part, a lead, if you will, to follow on Patrick McHenry's committee here to make digital assets a not only investment opportunity, but a daily exchange. And that requires not only blockchain, but a regulatory environment that allows it to be successful. Paired with that is coming out of this, as was mentioned, CFTC side. This is the guys out of Chicago, the commodity piece. How do we get new innovation coming in here? The Trump administration has made very clear that there's going to be a large opportunity for folks who want to dive into the cryptocurrency world. We're not going to make everybody be a Bitcoin, and meet those same standards on day one, that just crushes all innovation. So where can they come up and really find that they have an opportunity before they go into a SEC very strict monetary policy? Commodities market, I'm a guy from Iowa. We're familiar with how commodities work, whether it's corn or hog barrels. We want to make sure that we got the opportunity for new innovation to come out and give them a pathway. CFTC has been a very good partner in this. So this is matching up what's happening on the executive branch with the legislative branch. And then I will emphasize here, we've got to make sure that we are taking this very seriously so that we can, democratize this down to not only a local user level, but where we are not putting individual Americans in a very vulnerable situation. Just this summer, we have seen, the Volt cases coming out of China, both Salt Typhoon most recently, Volt Typhoon earlier. Volt Typhoon was a cybersecurity aggressive maneuver to get into our infrastructure, really leave cyber time bombs throughout the entire system. The same can be true for our blockchain being a best inoculation against this. Because Salt Typhoon, which we've seen for the last 90 days here, isn't just targeting senior officials in the administration, the president, J.D. Vance, and others. Now they're pulling information from individuals. And the best the government has been able to provide is to say, hey, use Signal, use an encrypted app. It shouldn't be dependent on us as Americans to have to defend our data. There are new technologies out there. They're going to really not only safeguard this, but take it to the next level for a competitor who wants to break in. At the same time, we at the federal level have to be prepared, and I'm sitting on the national security sub, to hold bad actors accountable here and identify how they're doing it. Because the reality is the technology is going to move much faster than any policy will. Do we have an apparatus in place where we can take good public guidance, marry it with private innovation, and then follow through with a national security strategy that holds our adversaries accountable on this? I think all three of these, and we've talked with the banking committee, are very much on board. There's your inside track on what we're looking at for at least the next 2 years.
All right, Congressman, we're grateful for your service, and to all my panelists, appreciate your insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.
Thanks so much.
Jill.